Hi everyone, let's go over my medium time frame and low time frame bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bearish scenario, where we are looking for an expanding flat to the downside in a 3-wave A, a 3-wave B, and then a 5-wave move to the downside in a wave C, which then is an impulse, where the most common target for wave C is between the two 1.618s, which is between 23.4k and 22k. Now, one of the 1.618s can be found with a trend-based fib extension from the high to the low of A to the high of wave B, and the other 1.618 can be found with a Fibonacci retracement from the low of A to the high of wave B. And what's nice about this most common target area is that it has confluence with one of my support boxes, which is the blue one over here, which is sitting between 21.8k and 22.6k. Another thing that's interesting is that on Bybit, this low has been taken, but as you can see on my chart, which is the Coinbase chart, it did not take this low. And in the past, I have collected statistics about this, and it is highly probable that on all the different charts, price will eventually take this low, so eventually more downside can be expected. If we look at the volume profile of the different ranges, then now, compared to the previous videos, I added another range to the chart over here, which is this one, as you can see. And currently, price over here is now bouncing on the value area low of this volume profile over here, after having support at the value area high and resistance over here at the value area low of this little volume profile. We now broke through the point of control as well to the value area low of this particular range volume profile, but now below, in confluence with the target area of C, what can be interesting is that if price can manage to find its way to the value area high of this volume profile over here, which has been tested once already, as you can see, so it is a little bit weakened, that price can find its way into this value area, move to the downside, where then the first target is the point of control over here at 23k, and the second target is the value area low at 21.9k. If we then zoom into the low time frame, then what we are looking for, right, is an impulsive structure to the downside, because wave C is an impulse. Now, in this scenario, we're then looking for this to be a wave 1 5-wave structure, followed by a 3-wave WXY correction in a wave 2, for then a second 1 2 3 4, and we're waiting then for a white wave 5 to finish, which then also finishes the blue 3, then a sideways range in 4, and eventually a wave 5 to the downside, which then ends a 5-wave move to the downside, a 5-wave impulse. Now, if we zoom in to this structure over here, which then is part of the blue wave 3, we are counting 5 waves, and then a wave 1, very short wave 2, big wave 3 to the downside, which could be finished or not yet finished. That's of course the question, but eventually we are expecting a range to form and eventually a new low, and also the new low is expected based on volume. So over here you can see that as price moved towards the downside impulsively, volume has been moving to the upside. That is exactly what you want to see in an impulsive structure. However, for an impulse to end, what you prefer to see between a wave 3 and a wave 5 is that a wave 5 makes another low, but on lower volume. So at the moment, because this low has the highest amount of volume, we can imagine that a wave 5 is not yet in white in this particular scenario. Also, if this is the white wave 2, and we might currently be working on a potential white wave 4, now the weekend is coming up, which is famous for ranging, but also because wave 2 over here at the high was so incredibly short in time, we can therefore, because of the rule of alternation, expect wave 4 to be a long and shallow range. Now, as you can see, for a wave 4, I have a couple of Fibonacci's on my chart, and these are taken from the high of 2 to the current low over here that we have on the chart. And usually a wave 4 retraces to around the 382, maybe the 0.5, but the 0.5 over here is a maximum target for a wave 4, and you don't really like to see candles closing above the 0.5. It's allowed to have at least a wick, but on the 1 hour here, preferably candles are closing below the 0.5, and the invalidation for this scenario is if price really goes over here to like the 27.9 or actually 28k area, but again, preferably you don't want to see candles closing above the 0.5. If, however, candles would close above the 0.5 over here, then the next potential scenario that I already have in mind is that the blue wave 3 might be in, and this might be part of a blue wave 4. So then we have the blue 3 ending over here, currently working on a blue wave 4, which means that the Fibonacci pool is different, because these fibs that you see on the chart are pulled from the white 2 to the low over here, but then you have to pull it from the blue 2 to the low, which means that all the levels go up just a little bit, as I can show you over here, taken from the high to the low. Of course, I need to select the right high. And as you can see, the levels are just a little bit different. The 382 and the 0.5 are a little bit higher, but as it stands now, this is not the case. We are still ranging below the 0.5. And we do have some interesting confluences in this area over here that just above price at the moment, between the 0.382 and the 0.5, we have this monthly. Now, price pushed through the monthly to the downside doesn't mean I remove it from my chart, because it can now be an important area for a retest before then continuation to the downside. And also below price at the moment, just below this low, we have a daily naked point of control that I also keep my eye on at 24,975 in case price is moving to the downside. Now currently, as you can see, price is also finding support on the 1.618 and the 3.618, and the blue 1.618 is taken from the high of 1 to the low of 1 to the high of 2, which is a minimum target for the blue wave 3, which is what you want to see. And usually the 1.618 does give a little bit of a reaction, as we can see over here. But currently, the higher probability scenario is that this wave 3 is not yet finished, and we still have a little bit of a move to the downside to go for this particular wave 3 to take this low. And after 3 is in, we then get a longer range 4 in blue. Now, what is also interesting, and I like to share, is this golden pocket. This golden pocket is taken from the low over here to the high. And currently, price is ranging below the golden pocket, as you can see, below the 618 and the 66, finding support on the 786. Also, by the way, the 886 has been hit, which is rare for a 2, common for a B or X if you're looking for impulsive structures. But in a bearish scenario, of course, this is not great. And if price goes to the 886 again, probabilities are higher to move to the downside. But the golden pocket, now that price pushed through the golden pocket without any support, basically, as you can see, it now becomes a resistance area. And if I then open that monthly one again, the confluences over here, then inside the golden pocket, you can see the purple line, which is the monthly 27,223 on my chart over here, which is now an important resistance area in confluence then, of course, with the low time frame count, the 0.5 and the 0.382 for the potential high of a wave 4, but then also in confluence with that golden pocket, which can now act as resistance. So price could potentially be ranging over here for a while throughout the weekend. Not too much action, just sideways, before then potentially a move to the downside, or as we expect, maybe a last push before the weekend, we could move towards the downside, but that is of course yet to be seen, because eventually downside is expected. If we at least keep an eye on the CVD divergences though, then currently, very locally, we do have minimal bearish CVD divergences, but nonetheless, they are there. If I go to the AGGR chart, which is, you can find the template and everything in Discord, as well as at in the video that I put in the end screen, you can see over here, price is moving to the downside, but the yellow line moving to the upside, which is a bearish CVD divergence. However, the target for this bearish CVD divergence is this little low over here. So yeah, it's not a very impressive move. So I would actually say it's kind of neutral at the moment. There's not a lot going on. We really need more price action to eventually get more of an idea of what might happen on the chart. However, if I do think about a potential range over here, then something I can imagine is actually something I shared in Discord. So if I scroll up, then someone asked me in Discord, which was Captain Randlelwa. He said, damn, we were having a joke. He said, was just about to ask for next week's chart. And even though we were joking, you know, if we are going to get a prolonged range, then this might be something I'm looking for, where we could get a move to the downside, hit the golden pocket, taken from the low over here that we made on the chart to the current high of the range, for then a bit of a move up to the monthly eventually, maybe at the end of Sunday or even Monday, and then move to the downside to the lower support areas where we have a daily naked point of control and some more support as well. So, you know, that's just a general idea. It's very much hypothetical. We don't actually have a lot of price action at the moment, especially after a move like this. It's important to let the chart rest basically and let price action show its next move. If we then finally look at the probabilities of the different scenarios, I think it's quite clear we are looking on the medium time frame for still a move towards the downside. Of course, that can take some time. It's definitely not a direct move, but we are looking for a 5-wave structure to the downside, where wave 4 from an Elliott wave point of view is not yet in and has yet to be made, where over here this blue or this white wave 2 is very short, so we can expect a longer wave 4 in white once wave 4 is really starting, and eventually then we have a 3, 4, 5, 4 more downside, but all of that might happen next week or in the couple, upcoming weeks basically. So that is currently the higher probability Elliott Wave scenario on the chart. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.